Lots to talk about. Let's do it now with an expert. We're joined now by Brendon Bernard. He's senior economist at Indeed.com. Welcome, first of all. What do you think?
Wow. Well, another month where we're kind of waiting for those cracks to show. There's a real difference between tapping the brakes and a full U-turn. And I'd say Q2, July, we were kind of on the tapping the brakes side. And I think we're still in that mode. One of the things that StatCan pointed out in their write-up was that while overall the job numbers advanced at a pretty strong 40,000 per month, it actually didn't keep up with population growth. The population in the month recorded by StatCan grew by over 100,000. And so the employment rate actually ticked down a little bit slightly. Now, this isn't to say that that 40,000 number isn't strong, but what it's saying is that we have to revise up what our baseline is for a solid jobs report when the population is growing so quickly, because more people means more potential workers, and at least that's translating to a gain in jobs. But it's not a blowout report like we would consider 40,000 going back to 2019, let's say.
What about this wage growth number, and what does that mean to the Bank of Canada?
That's really surprising. I've been waiting to see wage growth start to cool down. All the ingredients driving wage growth suggest that wage growth should be starting to ease. We've seen job postings come down substantially. Inflation is cooling, so that should mean less substantial cost of living increases. And yet we still see wage growth in the range of 5% year over year. Definitely a strong number. I'm still waiting to see it cool down. I don't think this can last forever, but it is a real question for the inflation outlook, because right now wages are driven by a combination of inflation and productivity. And we got no productivity growth in Canada. So then the sort of missing circle is inflation. And if wages are running 5% without any productivity gains, it's probably going to mean inflation will stay elevated.
So is this a number, the wage growth number, that can nudge inflation higher and ultimately prompt the Bank of Canada to raise interest rates one more time?
I think it's just one number. They're looking at the whole gambit of indicators. And while it's clear that, I guess, in the LFS that wage growth remains strong, I think the underlying drivers are there to cause a deceleration. Definitely haven't seen it yet. It's held up longer than I was expecting. I think they'll sort of look through it and kind of take into account this sort of broader economic picture coming out of it.
Do you believe the Bank of Canada's finished, that 5.0% is the end?
I believe in data determinacy. The idea that we can predict all these things going forward. Back in June it was all on the hike train. Now we're back in pause. I just let the numbers come in.
Okay. Here are some numbers from the table that StatsCan provides of specific industries. All the job growth came in the services sector. There were, in fact, 42,400 jobs created in services and 2,500 jobs lost in goods producing. So if you do the math, that gives you the 39,900 net advance in jobs. There was 52,000 new professional jobs added. These are some of the numbers that really jump out. 16,000 jobs lost in finance, and we have heard anecdotally stories of banks, big Canadian banks, trimming their workforces. We had almost 30,000 jobs lost in manufacturing. There was expected, and you can speak to this, Brendon, we're expecting a big bounce back in construction jobs, I believe because of bad weather in July, if I'm not mistaken. And indeed, there were almost 34,000 jobs created in construction after a loss of almost 45,000 jobs in July. There were references to heavy rains in July that kept a lot of construction workers home. That's
interesting. And it just highlights the volatile nature of these job numbers and how we really have to be careful to kind of read into trends. Even if you look, even beyond month to month, the construction job numbers had softened a bit. Now we see a nice little jump in August. And another category that even growing even more than construction, 52,000 increase in professional, scientific, and technical services. So this includes the tech sector, other white-collar areas like legal and accounting. This had been Canada's standout sector. Professional services and government had been the two standout sectors for Canada, but professional services had shown some weakness over in Q2, a couple consecutive monthly declines. Here with a major increase. A bit surprising. Looking at job vacancy numbers, the number of job openings in the sector definitely has come down, and I haven't seen a reversal of that. But we see in the job numbers a pretty strong month. Just to highlight that kind of when we see a trend brewing, it may not last. The LFS it can be pretty unpredictable in that regard.
What's it telling us that there were advances both in full-time work and part-time work? As you know, sometimes it's a real tale of two different elements of the job market there. We often see a loss in one, loss in part-time, for instance, made up by a gain in full-time, or the opposite. This time, both sides of the equation advanced.
I mean, it's better than that mismatch, because then we're kind of getting a cloudier signal. It does really suggest that August was a pretty solid month. But once again, I think in the broader kind of taking a step back, I do think the Canadian labor market isn't chugging like it was back in 2022 or Q1 this year. Good to see a strong number, but this comes after a pretty weak Q2 and a soft July. And underpinning a lot of this growth is rapid population growth. And so that also should cause us to revise up what we consider a strong number.
Okay, finally, 5.5% rate of unemployment. Remind us how that stacks up historically. That's very, very low for Canada.
So it's low when we look over the decades time span, not quite as low from the perspective of the COVID recovery. So we had a point at the start of this year where for several months in a row we were at 5.0%. That's lowest in modern labor force survey history, which starts in 1976. So 5.5%, not quite at that really tight level that we were at the very start of this year. But in the big picture of things, that's quite low. It's right around the very bottom that we reached pre-pandemic. And so still one that suggests a good market for jobs, for the employment situation overall. Just things aren't quite as strong as they were at the beginning of the year.
Brendon.